777, y'all. 777. 777, dude. Rui, 777, dude. 777. Do you trade your own capital? Yes. 777. And how much should I have for algo trading? If you can't pass PDT, I wouldn't come around here, dude. So, yeah. I wouldn't start with anything under PDT. Understanding market making and inventory management. As a Python developer with experience in simple market making bots, you're already familiar with the basic mechanics of buying low and selling high. However, professional market making involves a deeper strategy, especially concerning inventory management and risk mitigation. Let's delve into how market makers load up and manage inventory, the associated risks, and how you can apply these concepts to small tokens on Solana. The essence of market making. Definition: market making involves providing liquidity to a market by continuously quoting both bid and ask prices for an asset. The market maker profits from bid-ask spread and facilitates smoother market operations. Core objectives: liquidity provision, ensure there's always a buyer or a seller for an asset. Spread capture, profit from the differences between buying and selling prices. Risk management, mitigate exposure to price movements. Loading up inventory. Why hold inventory? Facilitate trades. Having a stockpile of assets allows you to fulfill buy orders immediately. Control over pricing. With inventory, you can adjust your bid and ask prices to manage your market presence. Methods to acquire inventory: initial acquisition, direct purchase, buy the token from exchanges or OTC markets, seed funding, partner with token projects that offer inventory in exchange for liquidity or provision, dynamic inventory adjustment, algorithmic trading, use bots to gradually build up inventory without significantly impacting the market price, participate in liquidity pools, contribute to pools where you can earn fees while holding inventory. Inventory management strategies. Holding inventory exposes you to directional risk. The risk that the asset's price moves against your position. Effective inventory management is crucial to mitigate this risk. Key strategies: position limits, set thresholds, define maximum and minimum inventory levels you're comfortable holding. Automatic rebalancing, implement algorithms that adjust your positions when thresholds are breached. Price skewing, adjust quotes based on inventory. Long inventory: if you're holding too much, lower your ask price to encourage selling. Short inventory: if you have too little, raise your bid to encourage buying. Spread management: widen or narrow your bid-ask spread based on market volatility and inventory levels. Hedging: use derivatives, futures, and options. Hedge against adverse price movements by taking positions in derivative markets. Cross-asset hedging, correlated assets. Hedge your positions with assets that have a strong correlation to your inventory asset. Risk analytics, monitor market conditions. Volatility tracking, adjust your strategies based on market volatility. Order book analysis, keep an eye on market depth and liquidity. Use risk metrics, value at risk. Estimate potential losses over a given time frame. Stress testing, simulate extreme market conditions to assess risk exposure. Professional market makers and directional risk. It's true that holding large inventories makes market makers susceptible to directional risk. However, they employ sophisticated strategies to manage this risk. High frequency trading, execute trades rapidly to minimize exposure duration. Diversification, spread inventory across multiple assets and markets. Advanced algorithms, use machine learning and predictive analytics to forecast market movements. Regulatory compliance, market making with small tokens on Solana, less competition. Small tokens have fewer market makers, allowing you to capture larger spreads, edge potential. Inefficiencies in these markets can be exploited for profit. Challenges, low liquidity can lead to higher volatility and slippage. Price manipulation risks, smaller markets are more susceptible to manipulation. Implementation steps, technical setup, familiarize with Solana ecosystem, Solana's architecture, understand Solana's high throughput blockchain and its programming model, DEX platforms, get to know decentralized exchanges, DEXs like Serum and Radium, developing the bot APIs and SDKs, utilize Solana's SDKs and APIs for interacting with the blockchain, order placement, implement functions for placing and canceling orders efficiently, latency optimization, ensure your bot operates with minimal delay to complete